So in investment banking, your floor is divided into two broad parts. One is the equity part, which is basically involved in fundraising through equity, M&A, etc. And the other is the debt part. So your equity part also will be subdivided into small teams depending upon sectors and all. So you may have a natural resources team, you may have a team for industrials, a team for FMCG, etc. And then you may also have sector agnostic teams which are looking at multiple sectors across typically the smaller geographies. And then you have the debt side of it. Now the debt side of it is basically when, let's say, companies want to raise money through debt, through bonds, etc. That is where the debt part of it comes in. The debt part of it is also subdivided into, let's say, investment grade bonds. That's a separate team. Leveraged finance, which is basically when you want to raise money through high yield bonds with slightly lower credit rating. That's a separate team. Then we have structured credit for complicated, credit instruments. So that is basically how the team is structured. The longest I have worked has actually been around 18 hours, I think. I reached office at 11 o'clock and I left the other day at 5. And trust me when I say this, I was one of the early ones to leave office that day. So, yeah, that was pretty hectic. Yeah. See, the scope is tremendous. The mobility is very high. In fact, I think investment banking is one of those areas where you have the highest exit opportunities. I know there is a lot of craze around investment banking and it is not undue. I mean, it is justified because the money is good, but what you do need to understand when you take up investment banking is that you need to look at the fixed compensation as well, especially if you are joining at smaller banks, at smaller firms. You need to look at the fixed compensation because a lot of your compensation is variable bonus, which is linked to how many deals you complete. Variable bonus could go as high as 100%, 200%, 300% also of your fixed in a good year. When there is a lot of deal flow, that is not unheard of. It happens. But see, the exercise and the effort of closing a deal is really very high, and many times that bonus is linked to whether you can get a deal for the firm. So it is about acquisition. So be very careful when you read all these templates that they will get you into investment banking and all. Be very careful. Is it actually investment banking or is it a sales kind of a role where you are just acquiring customers for the bank? Because investment banking is so much in demand, I have seen people just throw money at random things. Before you do anything like this, please make sure that it is actually an investment banking role and not a sales role. It should not be like this, that almost all of your compensation is variable, bonus linked, contingent on you bringing deals for the firm. So please be very careful when you sign up for things like this. I get asked this question a lot, and honestly, between equity research and investment banking, I personally liked equity research much more, basically because I found it more sustainable. If I give you context, the longest I have worked in equity research would be 14 hours, and the longest I have worked in investment banking is, I think it's upward of 18 hours also. I have not really calculated, but it is a lot of difference. And more importantly, it is about the frequency of how long you are working for such extensive hours. In equity research, I have been working for extensive hours only when we are initiating on something, only around the results time, only if you are taken over the wall. Okay, otherwise it is fairly sustainable. In case of investment banking, again I'll tell you, it depends on the deal flow. If there is no deal flow, then of course there is no work. But if you are lucky, the deal flow will be there, and deal flow should be there. So the frequency of the number of days that you end up stretching yourself is very high. But having said that, exit opportunities into strategy are very good. Exit opportunities into consulting, PEVC, all of that are open for you. irrespective of whether you go into investment banking or whether you get into equity research. So which of the two do you like is completely up to you. And if you want to, make it into the hedge funds, into the portfolio management side of things, this is your entry point. Equity research and investment banking are your two entry points into core finance careers. And if you are interested into breaking into either of these roles, feel free to connect with me. All the best, and I'll see you in the next video.